President Trump, God bless him for doing what he's trying to do. But, when you say to the BRICS countries, if you do this, you unite, we're going to add 150% tariff. That is not a tariff. That is a sanction. This is what is pushing all of these countries together. And I guess, to me, the stroke of genius in all of this is not just making it proprietary to the BRICS countries, but opening it up through a series of treaties, if you will, through all of these countries who are in some way or fashion tied to the BRICS countries.
I suspect that although ultimately the US dollar will lose 75% of its purchasing power, I think it will perform roughly in line or a little better than most of the other currencies.
When this credit bubble pops, it's far bigger than 1929. This is a real disaster staring us in the face. And this is why I just say, get the hell out of credit, get into real money, which is only gold, not Bitcoin, only gold.
The global financial system is undergoing a quiet but seismic shift. The rise of BRICS nations, combined with the rapid development of alternative cross-border payment systems, is creating the foundation for a monetary order that bypasses the US dollar. Central to this transformation is the expansion of the mBridge and BRICS Pay platforms, which enable instant cross-border settlements at a fraction of the traditional costs. More importantly, these systems are increasingly being tied to gold, not dollars, through multi-jurisdictional vaults from Hong Kong to Saudi Arabia. This represents a step toward a gold-anchored settlement mechanism that could eventually challenge the very trust-backing fiat currencies. AndySchectman, a precious metals strategist and CEO of Miles Franklin, RickRule, a veteran investor with decades of resource market experience, and AlasdairMacleod, a leading economist and head of research at Gold Money, highlight how BRICS nations are not only consolidating their own financial strength, but opening the door for nearly 3/4 of the global population to settle trade outside the dollar system. What once looked like a distant possibility is now a practical reality, gaining momentum day by day. As U.S. deficits balloon and the weaponization of the dollar intensifies, alternative systems backed by gold are rising in legitimacy. Ignoring these shifts is no longer an option for serious investors. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think the biggest indictment against the system is, well, there are a couple. Number one would be the cross-border payment system, the renminbi cross-border payment system that was the mBridge. And this system, which is operational, has already been connected to 11 countries in Southeast Asia, which in and of themselves have twice the population of the United States, about 800 million people. And they also have taken over as China's largest trading partner by far. They represent almost 40% of global GDP. They've also connected several Middle Eastern countries, 5 or 6 of them, into this system. And I think when you take a look at the moves that they are making, it is the development of multi-jurisdictional vaults throughout what ultimately, I believe, will be the Belt Road Initiative. The first vault is completed in Hong Kong. The Shanghai Metals Exchange is expanding their reach. The first one is done in Hong Kong. And what it basically means now is that digital yuan is immediately convertible into gold in the Shanghai Exchange in Hong Kong, if you'd like, for delivery without having to convert first back to US dollars. Now, the second exchange, ironically, is being built in Saudi Arabia. Now, if you go back to the genesis of the mBridge platform, Saudi Arabia was the 5th full participant in mBridge. They are now building one inside of Saudi Arabia. Now, I listened to an interview with the gentleman who developed BRICS Pay, which is the cross-border payment system, B2B, business to business, retail, in essence, small bank to small bank, or business to the public. It's like a credit card, in essence, that will connect any of the folks who use the BRICS Pay system. Now, we have to understand that once maybe the biggest move in all of this, that a lot of the naysayers would say the BRICS aren't big enough, they're not substantial enough. And I understand people why they would say that. Independent of their size as is, which represents, I don't know, close to 50% of global GDP. But when Sergei Lavrov, the Russian foreign minister, came out and said, we're opening this up to everyone except the West, except the dollar, the pound, and the European Union, the bells went off, and they should for everyone. And so the gentleman who is setting up BRICS Pay, the developer, said, yes, we are in the process of right now rolling this along with BRICS Bridge, which is central bank to central bank. These are being opened up and rolled out through the Belt Road Initiative right now. That's 75% of human population. And then you throw in the other institutions like the Shanghai Cooperation Organization and the Eurasian Economic Union, along with the BRICS. These are all very closely tied entities. They're not all part of BRICS, but they will all be able to settle on this cross-border payment system that settles in 7 seconds, free from SWIFT interference at a 98% reduction in fees. But the kicker to it all is that, yes, they all would use their own cross-border payment central bank currencies, the digital currencies, that the majority of the countries in the world are already developing or have developed. The key is that they will be able to settle imbalances in gold, and ultimately, through a series of multi-jurisdictional vaults that started in Hong Kong, is now being built in Saudi Arabia, and then through the rest of the Belt Road, so that they can settle imbalances in gold or completely settle in gold. I think it is a trend that is growing with legitimacy by the day, and I think to underestimate it is a mistake. I think that that's kind of what they're counting on. I guess we'll see how it all plays out. This is not a common currency. This is a common settlement currency, with gold replacing not the dollar, but really what stands behind the dollar, the trust that we've lost. Anyways, that's what I think about the BRICS, and I'm happy to keep going if you want.
I think you're absolutely right about that, Andy. And the only thing that's missing is a fixed exchange rate between gold and yuan. And I think that will come. It'll come in time, not very much time. And I guess that from China's point of view, that's really where they see themselves going. But they can't introduce it, if you like, without the dollar actually destroying itself, for the very simple reason that China does not want to be blamed for the end of the fiat currency system. But this is looking like Bretton Woods version 2, essentially. Gold would not be exchangeable for ordinary citizens. But when it comes to trade imbalances, that will be the medium.
And I guess I would add one other piece, is that when you add into it the BRICS Pay layer, which is the B2B side, where anyone who possesses this technology will be able to use it to conduct business. And the fact that it's being rolled out to 75% of human population, the fact that the only countries that will not be able to use it are those within the European Union, the UK, or the United States. All of this settlement outside the dollar, whether it be on central bank side or on the B2B side, on the retail side, is chipping away little by little at the dollar hegemony. And then when you add into it the ability to purchase gold instead of U.S. treasuries, as has been the status quo forever, this chips away at the reserve status. And why would anyone want to own our treasuries with our fiscal irresponsibility, $2 trillion deficits every single year, and the weaponization of the treasury market, the ability to sanction? And President Trump, God bless him for doing what he's trying to do. But, when you say to the BRICS countries, if you do this, you unite, we're going to add 150% tariff. That is not a tariff. That is a sanction. This is what is pushing all of these countries together. And I guess, to me, the stroke of genius in all of this is not just making it proprietary to the BRICS countries, but opening it up through a series of treaties, if you will, through all of these countries who are in some way or fashion tied to the BRICS countries. And that, to me, is the key to I think this becoming an idea that has merit to one that is wholly legitimate over time.
I think one thing that's interesting in this is that until this happened, China basically cornered the gold market. I mean, there's no other way of putting it. And now they're opening up. So, this is a major move. It really is a major, major move.
The global currency landscape is shifting, with the US dollar remaining the leading reserve currency, but increasingly vulnerable to erosion. While it may continue to outperform weaker fiat peers, such as the euro, yen, and sterling, its long-term purchasing power is steadily declining. Massive fiscal deficits, persistent inflation, and structural imbalances within the global economy point toward an inevitable devaluation. For many observers, the dollar's relative strength is less important than its absolute weakness when measured against tangible assets, such as gold. Gold stands apart as a medium of exchange and store of value that is not tied to political constituencies or central bank obligations. Unlike fiat currencies, which depend on credit and balance sheet entries, gold represents final settlement without counterparty risk. Silver, too, offers a compelling opportunity, particularly for those who understand its leverage potential in both physical form and through mining equities. As global credit bubbles expand beyond sustainable levels, the risks of collapse grow larger, echoing crises even more severe than the 1929 crash. The solution lies in reducing reliance on debt-based instruments and seeking shelter in assets with intrinsic value.
I suspect that although ultimately the US dollar will lose 75% of its purchasing power, I think it will perform roughly in line or a little better than most of the other currencies. I do believe, as Andy suggests, that the hegemony of the dollar and the hegemony of the US Treasury as a savings instrument will be challenged over the next 20 years. But I suggest that the US dollar will still be the world's reserve currency for the balance of my life. For the record, I'm a very healthy 72 years of age. When I look at the challenges that face Russia, that face China, that face Brazil, that face India, I'm not envious, even relative to the challenges that I face as a US dollar holder. This isn't by way of suggesting, by the way, that someone doesn't denominate their own savings in an instrument that doesn't have a built-in constituency for devaluation. If you look at every major currency in the world, one of the ways that they fight trade wars is impoverishing their citizens by reducing the purchasing power of the wages that they pay. Gold is the only medium of exchange, that's simultaneously a store of value, but more importantly, arguably, the only effective global currency that doesn't have a built-in political constituency for devaluation. Every other currency has a built-in political constituency around employment, for devaluation. And that, to me, is an important differentiator. I agree with what Andy says around the replacement of the weaponized SWIFT settlement system on a global basis. And by the way, I think that's a wonderful thing. The proliferation of currencies, including cryptocurrencies, is a wonderful thing. I'm a consumer of currencies. I want people to invent lots of them in hopes that some of them will serve me better. I don't think that the relative decline of the US dollar relative to other currencies is a particular reason to own gold. And I don't think, ironically, in a relative sense, it's going to happen. I think the US dollar will do well relative to other currencies. I just think it won't do well compared to gold or compared to rational allocation.
Well, if I can just butt in here, I very much take the point that the dollar is the king rat of currencies. It is the top fiat currency. I mean, when you look at what's going on in Europe, France, Britain, Germany, etc., I mean, there's absolutely no doubt that the euro, sterling, also the Japanese yen are fundamentally weaker than the dollar. And they don't have that cachet, if you like, of being the reserve currency, any of them. And I mean, thinking about the geopolitical situation, I mean, there's no doubt that Russia is winning the war against Ukraine. That will be won on the battlefield. We just have to think what that's going to do with the euro. That is going to be, I think, a catastrophe for the euro, principally because the European politicians, they haven't a clue what they're doing. They don't understand. They just don't understand what's going on to the east of them. And not only that, but there is so much money being invested in defense and also previous bank lines and all the rest of it into Eastern Europe. You know, this I think is going to be, that's going to be the moment when the euro really starts falling, really declining. It's not so much the inflation story, it's the loss of confidence story. That's what they've got to watch out for. And as for sterling, the only reason it's where it is because its bonds are yielding higher than any of the other major currencies. But we've got a real disaster on our hands here. We really have. And that is going to drive sterling down against the dollar. So, I mean, your point, I think, is right. But, you know, these are all forms of credit. How do you know it's credit? Well, because there's an obligation on the other side of some balance sheet or other. In this case, we're talking about central banks as issuers, to actually pay. Now, we know it's a balance sheet entry, but it is credit. And this is why the only way to, if you like, hedge yourself against this catastrophe, it's coming catastrophe, and it's not just America, it's Europe, Japan, etc., with all the central banks technically bust. The only thing to do is to get the hell out of credit and get into gold. And at the moment, silver seems to be probably somewhat better. And you could probably also get a bit of leverage if you know what you're doing. And that's the key in the mining sector. Because there's an old story in London about Australian mines that, how do you define a mine? A hole in the ground surrounded by liars at its top. So, you got to know what you're doing in that game. But the rewards, I think, could be absolutely tremendous. They really could be.
And much of what President Trump talks about, it is to somehow find a way to bring back manufacturing, and that would start with the devalued dollar. I think saving in dollars, as Rick is famous for saying, if you're not a contrarian, you're destined to become a victim. If you save in dollars, you're going to go broke. When he said on my podcast, when I interviewed Rick in just a moment ago, he said he believes a dollar could lose up to 75% of its value. I don't think you need to know much more than that you need to have assets. Assets feed you, liabilities eat you. The dollar is a very big liability right now in terms of retaining and maintaining purchasing power. The dollar's down 11% already this year against a basket of currencies. It's down nearly 50% against gold and silver. So to me, the biggest mistake people can make is to have too much emphasis, if you will, on the U.S. dollar. And I think that is an easy one. At least to me, that's a softball. So it would be to mitigate your exposure to the U.S. dollar best you can and find assets that will do well in this type of environment. Precious metals equities, even cryptocurrencies. I think that keeping your money and saving in dollars is the absolute worst decision one can make right now.
And when you look at gold, I mean, at the moment, okay, we've got major banks coming out and saying, you have 40, 20, 20, whatever they're saying. And we're talking about banks which manage trillions. And here are here they're sort of chief strategists and all the rest of it saying gold is going up. You've got to have some gold. The poor fund manager hasn't got any, and he doesn't know where to go and get it either. The amount of liquidity in the market is just not simply enough to handle this shift of emphasis, if you like, away from tech rubbish into real money. It's just not there. I can see that when this credit bubble pops, it's far bigger than 1929. This is a real disaster staring us in the face. And this is why I just say, get the hell out of credit, get into real money, which is only gold, not Bitcoin, only gold.
The financial system is transitioning into a phase where traditional assumptions are no longer valid. Persistent deficits, geopolitical realignments, and a global credit bubble that has grown far beyond historic proportions are converging. The dollar may remain stronger than many fiat currencies, but its long-term purchasing power continues to erode. Gold and silver, on the other hand, are reclaiming their role as assets that cannot be diluted by political expediency or balance sheet maneuvers. This transition carries consequences not just for institutions, but for individuals. Relying on conventional savings vehicles tied to government promises leaves portfolios exposed to systemic risks. By contrast, tangible assets, precious metals in particular, offer the dual benefit of stability and optionality in a world where credit and currencies are increasingly unstable. Those who recognize this shift early will be far better positioned to preserve wealth and seize opportunities as capital rotates away from inflated financial products and into tangible value. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.